10:47 p.m. I'm sorry I'm 2 minutes late. Goodness gracious. But I am here. I'm back and I'm ready to go. And one of the reasons I was late, actually, and you'll be happy for me, one of the reasons why I'm late, is because I got back from the gym. And you can see it right here in my hair, all sweaty and messed up. Look at this hat. Look at all that sweat. Look at all that sweat in this hat. It's kind of crazy because I saw the gym membership get charged to my bank statement the other day, and I was like, damn, I haven't been there in 2 months. It is time to get back to the gym. So we are back. I'm 175 pounds. We're getting to 145, I promise, by the end of August. In fact, I can guarantee that because I am very confident in my abilities to drop 30 pounds over the summer. So we're getting down to 145 pounds. Today officially started the journey. And what better day to start losing weight and to get in the sauna and get hot than a day like today, because even though I was in the sauna, the market was much hotter than me. What an exciting day in the markets, dude. What an exciting day. I don't think any of us thought this Monday that the markets would open the way they opened up. I mean, it caught me off guard. I think honestly, during the GameStop shareholder meeting, which we'll talk about, that was a mess, but we'll talk about that in a second. I noticed right at the end of the GameStop meeting, I looked at the S&P 500 and we were at 545. And I was like, wait a second, why are we at 545 on the S&P? I didn't expect that. Palantir 25. We'll talk about that. Don't worry. We got a lot to talk about there. But S&P right here at 547. We topped out at 548. And I couldn't believe we were at 545 because when I left the market open, we were at 542. And, things were selling off a little bit. You're like, all right, whatever. We'll see what happens. Jumped right up to 547. There was no economic data from my understanding that I saw today. There was no jobs reports, nothing like that. I think we have a couple of things happening later this week. This was just the market saying we want equities. NVIDIA, 132. Tesla, 187, up 5%. PayPal is flat. SOFI is flat. Palantir, 25. We will talk about Palantir in just a bit. There's a lot I have to say on Palantir. Intel, TJ and I bought 500 shares of Intel at like $30.40. That's up 1%. Taiwan Semi, $922 billion market cap at 177. Even Teladoc's up 1%. Robinhood gapped up to 22.72, then came back down 22.32. Bitcoin itself is not mooning right now. Bitcoin is at 66,700. It was at 67,000 at one point, but the Bitcoin miners are doing incredible. CleanSpark up 8%, Coinbase 244, Hut 8 Mining up 8%, IREN up 10%, MicroStrategy up 1%, Bitfarms up 9%. So it seems like the Bitcoin miners are starting to go higher with 5 to 8% moves on the day, which maybe is signaling that Bitcoin itself is getting ready to run, because traditionally when the miners have bottomed, and maybe today is the bottom given how last week was the bottom given how they are moving today. That is a move that is previewing what's going to happen to Bitcoin. So very bullish for the broader Bitcoin ecosystem and for crypto stocks as well. And so it's been a hell of a market, a nice green run today. Did not expect the market to be the way it is, but it's really nice to see how it's playing out. Stocks that hit their 52-week highs today: Microsoft, NVIDIA, Taiwan Semi, Broadcom, Eli Lilly, Costco, Netflix. Netflix is 677. I think at one point it was 682. Applied Materials, Qualcomm, Micron Technology, Unilever. We had Chipotle, CrowdStrike. CrowdStrike's at 393. I mean, that stock. Congrats if you got CrowdStrike. If you got CrowdStrike, congrats, because that's one that historically has been seen as overvalued for a long time. But I mean, they crushed their numbers. They got into the S&P and they keep going. What else do we have? 52-week highs. The Best Buy hit 52-week highs. They had a really good earnings on the backs of AI. Dick's was up today. So shout out to Dick's. BJ's was up today as well. So Dick's and BJ's doing what they need to do. And those were the main. Oh, and then Hims. Hims hit, I think, 25.13 at one point. Right now at 25 or 24.20 on the day. And then stocks that hit their 52-week lows. Cisco. I believe SOFI was on the list at 636 at bottomed at. Warner Brothers Discovery, Lee Auto. What else do we have right here? SOFI's on the list. Paramount, Path hit, I think 1113 or 1110 on the day. Bill, Space, Virgin Galactic. So a bunch of stocks hit their 52-week lows, but the stocks that did well were the stocks that generally have done throughout the entire year. And those stocks were up on the 52-week highs. Gene bought CrowdStrike at 122. Incredible buy. I mean, I think you're almost up 3.5x. That's incredible, dude. Absolutely incredible. Put in the chat any stocks that are up for you on the day, or if you want to say how much your portfolio is up, percentage up, whatever it may be. Any stocks you may have that other people aren't really looking at that are up on the day, that are rallying with the broader market. I think it's been an incredible day for a lot of people. We'll talk about Palantir. We'll talk about SOFI. Actually, let's talk about Palantir first. I was going to show this clip about the bull market and a strategist that I thought had some good comments, but let's talk about Palantir first, and then we'll get into that clip. Okay, so Palantir. I put this out on Twitter, and I thought the Palantir move was exciting. Now, we saw it in the morning. We touched $24 on Palantir. Well, we did the one share buy, and the one share buy helped us get to 24, but then we fell right back to 23.50, and then the market continued to go higher. So this is what we are seeing on Palantir. Currently, right now, Palantir stock, are we still at 25? We're at 25 bucks on the dot. We hit, I think, 25.05 at the top. Here are my theoretical arguments for why Palantir has gone higher today. APLD, that stock's up right now. APLD, let me check that. APLD, Applied Digital. Wow, 17% on the day. APLD. All right, shout out to you if you got APLD. That stock also is doing incredible. So, a couple reasons why Palantir is up, if you're wondering. Number one, we got a price target upgrade to $31 last Friday and a price target initiation by Argus Research at 29. I didn't get the full research note, but Argus did say that the profitability is improving at a rapid pace, which they're right about. Profitability is improving very well. So that seems to be getting at least the market excited from one perspective. I mean, obviously the entire market is rallying, but that is one of the reasons why I think the market is giving some benefit to Palantir. Second of all, CRM and Snowflake. Now, CRM is down on the day. CRM is down. Snowflake, I think, is up a little bit. Snowflake's up 2%. So CRM and Snowflake, although Snowflake is up on the day, those are continuing to struggle historically over the past 5 months, and money might be leaving some of those SaaS names for Palantir. Third, markets may believe that Q2 will be a better beat than Q1. Someone said historically Q1 is the worst quarter for Palantir. I think that's incorrect. Q1 tends to be the best beat, and Q1 and Q4 tend to do really good. They tend to really hit expectations on Q1 and Q4 and beat them. Q3, in my opinion, tends to be the worst. Remember, Q3 2023, we showed 12% growth, which was just like really bad. And then Q3 2022, I think also we had we like said we wouldn't be profitable till 2025. So like historically, I think Q3 tends to be not the best, but Q2 tends to be actually decent. So I think every analyst on the street outside of 2 to 3 of them have us around the $25 to $30 price target, which means that will likely continue to go higher. And analysts, will start readjusting their targets as well. Fourth, companies like Oracle and Broadcom, again, continuing to prove AI is becoming more real. Enterprises will eventually need an AI plan. It's just the truth. Broadcom is up 5%. We'll talk about them. They have showed even more momentum. And then AIPCon. We had a whole conference with some of the biggest companies in the world, like United, Jacobs, AARP, and 70 other clients like Wendy's showed off how they're using AIP. I think once the monetization of these clients becomes evident, the market can then see the broader playbook that Palantir is using to capture that market. And that's going to end up being very bullish for Palantir, which is why we're seeing a lot of market momentum for the stock. So not bad at all. We got Fred, who's up $6,000 today, thanks to Palantir, Bitfarm, and Bros. Not bad at all. Someone's up 2%, up 4%. Palantir and Rivian are doing good for some people, up 6% on the day. Matt's up 5,000 on the day. SMCI, is that at a good day? I think that's had a good. That was up like 2% in the morning. SMCI. Yeah, wow, 5.3. Wow, SMCI is $10 away from 900. SMCI trying to touch 900, and again the S&P at 547. Remember, Tom Lee said 5,500 in June for the the S&P. I mean, we're kind of close. Maybe that happens. Maybe that does indeed happen. Let me pull up a chart that I wanted to show as well. We'll watch that clip after the bell. Here's a chart from Ryan Detrick. If we close green on the day, that will be 30 all-time highs for the S&P 500 in 2024 if we close green today, which means if we close basically at like 540-ish or something like that, or 547-ish, which will be very important. Now, this happened 20 other times, and that we finished the year green. Well, the 20 other times historically, if we finished at 30 all-time highs, the rest of the year finished green. The average return was 19.6%. The median return was 19.5%. So let's call it 20%. So 20 other times in history, the S&P 500 has had at least 30 all-time highs. 2024 is shaping up to be one of those years. And 20 years in history, the S&P 500 closed up 20%. We are only up 14% on the year. Well, let me check the S&P, probably 15% now. Which means we've got theoretically, 15.76%. We've got about 4.22% left, or 4.24% left to go, if historically that has been correct, which is a good thing for, the broader markets and good thing for S&P. Someone says they're up 50,000 today, up all in on Palantir. I love it. Dell's had a good day. So Dell's CEO was on CNBC today. We'll watch him later as well. And I mean, he was basically saying, look, the market is getting their stock performance correct. because they've been doing data and compute for the better part of 20 years. And so they understand this business very well, especially on the networking IT server side. And so his argument is like, look, if AI is a tailwind for all of these businesses, then data is not going away, and that data needs to be stored and serviced at the end of the day. Dell is going to be one of the main players. They're not going to be the only player, but they're going to be one of the main players. And so he's pretty excited for what will happen with Dell. Now we got Tesla here at 187, got the market close in 2 minutes. One thing that Elon Musk did tweet today, he is officially working on Tesla's master plan part 4. The last time we had the master plan, for those that don't know what the master plan is, that is basically Elon's vision for what will happen for Tesla over the coming basically 2 decades. The last time they put out master plan part 3 was April 5th, 2023. So it's been a little bit over a year. They're working on master plan part 4. I wouldn't be surprised if that comes out on the day of the robotaxi. That seems like it would be a good day to launch that. And when they announce that, if they have Optimus in that vision, if they have FSD in that vision, if they have, an entirely new way of paradigmatically thinking of EVs, that's going to be a big deal for Tesla shareholders. This was one of the pages in the master plan that they put out in April 2023, and it started off with the plan to eliminate fossil fuels. Now, Elon's not stupid about this. He knows that fossil fuels are going to be needed for a long time to be able to make that transition happen. But that's their ultimate vision, is that eventually fossil fuels will run out. And that is a fact, right? Maybe it's 100 years from now, but we are going to run out of oil and fossil fuels. So we need to have something that electrifies the economy. Unfortunately, EV sales have not been leading to that vision, right? Hybrid has done way better than EVs this year. And maybe that's a marketing problem. Maybe that's people are just tired of having to deal with superchargers. It can be for a variety of reasons. But I think the master plan part 4 is going to include a lot of different things in regards to Tesla's vision, besides just like a clean energy economy. It's going to be more so about, where Elon's thinking the next leg of growth is going to happen for the company itself, which I think is going to be Optimus and FSD. So going to be interesting to see how this plays out. We got the market open in just about 15 seconds. We'll see how we end on the day. And then we got a lot of other stuff to talk about. We got some more Palantir stuff, GameStop stuff. And then I want to go deeper into what this bull rally is, why it's happening, and where we think it can keep going from there. All right, 4 p.m. What a Monday, June 17th. Thank you, everybody, for being here. The stock market is now closed. All right, we're done. S&P 547 on the day. It was at 542 when the day began. Pretty damn incredible, dude. Did not expect that in the beginning of the day. I mean, really, that dip, even Robinhood dipping to like 2187. Like a lot of the market, it was a head fake in the morning. And it was kind of just like playing around, I guess. And then we had a bunch of moves to the upside as the market decided that they wanted equities. CRM down on the day. SMCI up 5%. Dell up 5%. Applied Digital up 17% on the day. Palantir up 6.15% on the day. 25 is so pretty. Like, it's just so pretty looking at 25. One thing about Palantir, and I tweeted about this, is that, again, a lot of people are sitting on 4-baggers because their average is $6-7 because they believed in Palantir when Wall Street didn't. And so retail obviously had a hell of an advantage buying this thing at $6-7 if you were there early, because you saw the vision for Palantir. About 18 months later, Palantir now at $25. So really nice to see this on Palantir. GameStop at 25.23, down 12%. We'll talk about GameStop in a bit. SoFi did not have the best day on one of the best days, or on one of, I don't know if this was one of the best days for the market, but this was a really good day in the year. SoFi went to 632, I think it bottomed at. Closed up a little bit at 646. We'll talk more about SoFi after the bell, or after a little bit. But SoFi didn't have the best day. Rocket Lab also down 1%, didn't have the best day. Palo Alto Networks up 1%. Taiwan Semi, $920 billion market cap. Taiwan Semi and Broadcom are approaching $1 trillion. I think they've got to at least be candidates potentially to get into the Mag 7. Intel right here, almost at $31. Teladoc is up a little bit. UiPath down 1%. Robinhood down 0.76% on the day. Walmart 67.43. Broadcom up another 5.4%. Just incredible on the day. Did I say market open? Sorry. I always call the show market open. I meant to say market close. What else do we have? Hims right here, 24.15 up 1.68%. GoDaddy up 0.36%. SoundHound down 3% of the day. Adobe's down 1%, but it was up like 14% on Friday. So makes sense. Shopify as well, down 1.6%. They were up like 7% or 5% last week. So it makes sense. Meet Kevin's PP, $29. That's up 1.72. The highest thing in this ETF is Apple. And then he sold off a lot of NVIDIA last week. And then I think it's Tesla. And then it's Enphase. So Apple, Enphase, and Tesla is what he's betting on for the majority of this ETF. I think he has like 60,000 Palantir shares, and he has some Robinhood as well. And then Tesla right here, up 5% on the day. Let's look at the Max 7. Where did they end? So Microsoft hit an all-time high today, 1.31%. Apple 216. Apple's up another 2%. Apple's basically up 20% from the bottom. Google 178, Amazon 184, Nvidia 130, Nvidia falling off a little bit after hours, and then Tesla 187 green on the day. All right. Not bad. Someone says the Max 7 is not an index. Yeah, I know the Max 7 is not an index, but I just mean, when you've got these companies that are ripping the way they are, maybe we start including them into the Max 7 and make it the Mag 10 or something, because, it's hard to ignore TSM and Broadcom, dude. It's really, especially when they get to that $1 trillion level, which it looks like it could happen this year, very hard to ignore them. Someone got a SAF agent got a couple of 800% QQQ calls. Those were probably 0-day expiring, if I'm not wrong, or very short-term expiring, but shout out to you, dude. Not bad. Not bad at all. Yeah, if you sold covered calls today, or not today, but last week on some of these stocks that ran, especially on Apple or Palantir or Nvidia, then it was tough to defend them. It was very tough to defend them because the market continued to go higher. What's your view on Open Door Technologies? I don't like Open Door, and I think it doesn't take a genius to not like Open Door. Open Door was up when we had that CPI report come in lower than expected, because the idea is when rates get cut, inflation will come down. When inflation comes down, rates will get cut, which will be good for the housing market. But Open Door is struggling right now because in the United States, so I saw a stat today, we need 1.5 million homes to be built just to be able to resolve the housing shortage that we have right now. Open Door is in the business of buying and selling homes. And there's a reason Zillow shut down their iBuying business back in 2021, because it just wasn't working. Open Door said, okay, if it's not going to work for you, we're going to try to make it work for us as an external company. CEO founder left, the president left like a year ago. Just not been a good story on Open Door. Now, I think the bottom was like 75 cents. So if you caught the bottom, you're up like 3-4x. But Open Door was at $34 at one point. So tough story on Open Door, but the housing problem will persist until rates come down, and it's not going to be the best for Zillow, Open Door, a lot of the real estate names. Slivers Life says, I bought Palantir 7 but didn't understand the markets yet, and I got scared having so much. Palantir sold at $9.25 and diversified, now back at $19.06. Yeah, I think the key thing is just you're back in and you understand what you hold. And broadly speaking, I think Palantir gets to 200, 250 one day. It's not going to happen tomorrow. It's going to take time. But if that's the case, if your average is 20, 25, 30, even if your average is like 40 at that point, it really doesn't matter, right? You're sitting on a big gain. But most of the people that bought Palantir at 7, a lot of them have averaged up from the people that I've talked to, because 7 is a sexy average, but at the end of the day, you want more of the company. You want more exposure, right? And if you want more exposure, you're going to have to end up averaging up. All right. So here's a strategist from Ritholtz Wealth Management for why we need to believe in this bull market. Let's hear what she has to say.
Believe in this bull market. Callie Cox, who today was named the chief market strategist for Ritholtz Wealth Management, joins us here at Post 9. Congratulations, first of all. Great to have you.
Thank you. It's so great to be part of such an incredible team.
Yes, yeah, we're big fans. You do believe in this rally, although you sort of have this realistic view that 5 to 10% drawdowns are not uncommon.
Yeah, and that's what we're telling clients. Believe in this bull market, but also have some rational optimism here. Just because you're excited about the future doesn't mean you should be blind to risk.
What do you think would spur a sell-off? It would be an earnings story or something about the labor market or deferred cuts once again?
All of the above. That's the funny thing about investing. You're not sure what happens next. But right now, values are a little bit higher in the tech sector. Everybody's a little more sensitive to the rate story. Yields are coming down. So we'd hate to see something happen in the job market. We think that that's the foundation of this bull market. But then again, who knows what happens next? You
do make the point that when the labor market weakens dramatically, it tends to go parabolic, at least on the unemployment rate. So as a result, you do think September is in the cards on the Fed?
We think so, but we're not sure the timing really matters because the market expects rate cuts, and Powell has basically told us that that's the next move, barring any unexpected or extreme circumstances. At the same time, I mean, the job market is slowing, but it's slowing very gradually, and you're seeing a lot of supply coming in that's soaking up that a little bit of demand. So it's really, what the Fed is looking for.
When you say you're bullish on the market still, do you mean the market or do you mean the top tech stocks? It feels like this morning Liz Ann Saunders of Charles Schwab was on with us, and she said, you would be right if you predicted a tough first half. You'd be right if you predicted a great first half, because it just depends where it's happening. These stocks are so big and they've outperformed so much that they're not the market. Yeah, the market.
It's not a bull market for everybody, and that's been the case since the bottom in October of 22. I think right now it's the time to look for opportunity. It always is, but you're seeing so much value in those stocks outside of tech, in industrials, for example, in financials, and real estate, especially those ultra rate sensitive sectors. So it isn't a bull market for everybody, but we don't see that as a negative. That's, kind of how bull markets go, even though this one has been a little more extreme.
You're pretty constructive on housing, right? What's the case behind that?
Okay, so housing, and I'll remind y'all, we're talking about long-term views here. We're talking about clients who are building their wealth over years. And I think that there's such a strong demographic story in housing right now that it's really hard to be bearish at the moment, especially because housing, real estate on the commercial and residential side have both been hammered so much. And I don't think we've seen, the follow through from, potentially lower rates from the Fed. And I also think consumers are super rate sensitive right now. Mortgage rates have been around 7 or 8 for so long. If we see that cool off a little bit, we could see buyers come back into the market.
You think 6.5 is sort of the magic number, or it has to be lower than that?
It's hard to say. I think a 6 handle will get people excited.
I agree. If we get a 6 handle on mortgage rates, because right now mortgage rates are closer to like 7.7, 7.75. That would get people excited. If we get a 5 handle, I think it would be really nice. But the only way to get that is probably rate cuts. I mean, it's just a tough pickle with housing. But it is one of those things that is a catalyst. We know disinflation is coming in the shelter market, and we also know that rate cut is going to create even more disinflation for shelter. So we saw commodities come down last week. We saw CPI come down. We saw PPI come down. It's like that's the last thing left to fall. And when it does fall, the Fed will have all the ammo in the world to essentially cut rates. And it'll be what they need to do probably going into September. And when they do cut rates, it'll continue to make housing fall. So it seems like that is one catalyst left in the bank from the Fed. It's just a question of when they're going to do it. And when they do it, I think it'll be very exciting to see what happens. So Scott right here, shout out in the chat. Scott says, sold 80% of my Palantir position in covered calls, 24.28 last week. Now I'm biting my fingernails. Okay, so for those that wanted to sell covered calls on Palantir, there were some pretty aggressive premiums being given, and that usually happens on Palantir when it goes green. If you wanted to sell a covered call for January 2026, so you would put up your shares for about 2 years, you could get $325 for every 100 shares you have if you pick the $40 strike. So people were willing to pay $325 for a $40 call on Palantir. So the question is, do you believe Palantir will be $40 or less by January 2026? And even if it does get to above 40, you can roll out of the contract, obviously. But I mean, it's not bad to put up your shares for 2 years and get that much. You probably will get more when Palantir gets to 26, 27, 28. There'll probably be, the premiums will be higher. But I think some people did say that they took advantage of those covered call premiums because if you have a $20 average and you sell at $40 and your shares get called away, you make double and you get that premium. Not the worst thing in the world. Now, granted, I personally believe Palantir will be more than $40 eventually. I don't know if it's January 2026. So sometimes the premiums are worth it. Sometimes the premiums are not worth it as well. Michael says, no more weeklies. I'm out. It's too much stress. It's definitely a lot of stress. And earnings tends to be like mid-August for Palantir. I think the stress of having Palantir earnings and covered calls is just like stress that I'm not built to handle. So I can handle other types of stress, but that's not the stress I want to have. Okay, SOFI. Let's talk about SOFI. So I'm not as qualified to talk about SOFI as my good friend Data Driven Investing, who, if you guys follow, you guys probably know him. He is big on SOFI. He is the biggest bull I know on SOFI besides Tanner, and he produces a lot of due diligence on SOFI. So he had a post. I want to read the post to you guys, and I want to know what you think and how you guys conceptualize his DD around SOFI. So he says right here, let's play a fun game that I call Spot the SOFI. Here is the GAAP revenue growth of SOFI, CrowdStrike, Duolingo, and Palantir. Okay, so this is the GAAP revenue growth. Then he says, here's the GAAP net income of those 4 companies. Then he says, here's the gross profit growth of those same businesses, those 4 stocks. Now the conclusion. SoFi is up 50% off its recent 2022-2023 low, when I think it went to like $4. Palantir is up 327%. Duolingo is up 250%. CrowdStrike is up 325%. These are 3 of the best performing SaaS companies of the past several years. SoFi, which is just the bank in quotation marks, has kept pace with all of them. When it grows like a market-leading SaaS, has the margins of a market-lending SaaS, and has profitability like a market-leading SaaS, how should you price it? That's right. You should price it based on its tangible book value. That makes complete sense. He's obviously being sarcastic in that last sentence. So my question to everybody here in the chat is, does that make sense? What you just read right there, those 3 paragraphs where he says, hey, SoFi is performing on par or not if better than Palantir, Duolingo, and CrowdStrike, which are SaaS companies, tech companies. However, SoFi is being priced like a bank based on its tangible book value, which trades relatively, I mean, it trades at 1 times price to book, maybe 1.5. Historically, actually, it's lower than 1 times price to book, but that's what SoFi is trading at right now. My question to everyone in the chat is, does he have a point that if SoFi is growing like a market-lending SaaS, has the margins of a market-lending SaaS, and has profitability like a market-leading SaaS, then does SoFi deserve to be trading on its tangible book value? That is the question I have for everybody, because I'm kind of torn on this. I mean, to one extent, I get his point and I get his argument. To the other extent, I'm like, no bank is trading above their tangible, at like 1.5x their tangible book value. Not even JP Morgan or Bank of America, which are much more profitable than SoFi. So I think the bull and bear case to his argument is, yes, SoFi is growing more than those banks. It should be theoretically trading like a SaaS. But the problem is, if the business isn't being viewed like a SaaS by the market, either the market's stupid and the market's wrong, or the market genuinely does not think Galileo and Technisys, which are the fintech parts of SoFi, which creates the sort of SaaS elements of the business, are strong enough to justify SoFi should be trading like a SaaS. And so that's why it trades on tangible book value. The other argument is that if the market's wrong, then SoFi is deeply, deeply undervalued. And as soon as the market figures it out, SoFi is probably going to jump up to $20. A similar move like Palantir, Robinhood, and Hims, because the market figures out this company should trade, like a SaaS company. No Stress Invest says SoFi is just an online bank with tons of personal loan risk and a mediocre app. Growing is great, but if it has a personal loan risk, then big money doesn't want it. Oh, and SoFi Invest sucks. Okay. SoFi is trading at 1.1 price to book, now 1.5. Yeah, I think it was at 1.5 when it was like 740. So now it's at 1.1. That's correct. Colorblind Collector says SoFi will end up doing a reverse split. Now, remember, SoFi did file. They have the ability to do a reverse split if they want. I think they filed that November 2022. So they have the ability to legally do it if they want. They don't need to file the privilege to do it, but they can do it. What else? What other comments do we have? Honestly, it makes sense, but it really doesn't matter until Galileo actually starts growing more. Until then, it actually is just the bank, and that's from an unbiased current SoFi bull. Thomas says the difference is it's a bank. Ha ha ha. It has so many additional risks compared to those other SaaS companies. I think Bsov and Thomas kind of sum it up correctly. I think Thomas is right that it has additional risks out, like Palantir has not given loans to anybody, so Palantir doesn't have, neither has CrowdStrike or Duolingo. And then Bsov is also right here that until Galileo starts actually growing more, then it is a bank, right? Like until the tech side of the business starts, which I think is like 20%. And then, some people will say, well, Palantir is only growing 20%. Yeah, but Palantir doesn't have all the risks of a SoFi. And also, you could argue, the multiple you give historically to SaaS companies, even if you think Palantir is overvalued or CrowdStrike's overvalued, it tends to trade with SaaS names. Like that's just the nature of how it trades in the sector that it's in. And that's just Amazon will always be a little overvalued, right? But if SoFi is not seen as that type of a company, then it's not going to get that premium as well. Bay Ray says, fun fact, Meta is the only Mag 7 who hasn't done a split. Interesting. I mean, Meta has had a hell of a run. If we look at Meta, and again, at 400, I thought the Meta dip was stupid. I think all of us thought the Meta dip was stupid. Instead of buying Meta, I just bought more Palantir because at this point I wasn't ready. I wasn't ready. I didn't want to have a massive position in Meta. I just wanted to add more to Palantir. So I didn't care. But if I had tons and tons of money, I would have established a position in Meta at 400, because the only reason they fell was because of, I got the 398. It was because of CapEx. And we all thought that was a dumb reason, right? If they're spending more in NVIDIA and GPUs, that doesn't mean they're a bad company. That just means they're spending more to aggressively scale. So it was a very irrational dip by the market here to 398, and it's just done incredibly well. Same thing with Netflix. And look, I'll take accountability here. When Netflix fell to 550, I kind of did think it was justified a little bit because they were hiding their subscriber numbers. They fell to 542. And I was like, well, that's kind of sus, but market obviously disagreed. 675. They don't care that they're hiding their subscriber numbers. They just love the fact that Netflix continues to be the only profitable streamer that exists. Now, granted, I kind of think Netflix is overvalued here. I've never loved Netflix's valuation. I've also just never loved the product. Very hard for me to get on board with the actual content, but out of all the streamers, Paramount, HBO, Netflix is the best. And that's pretty objective there. So makes sense that Netflix is getting the move. So there you go. That's what we got. Dat Nugan says, all these negative comments are similar to what people used to say about Robinhood last year when it was $7. So I am sympathetic to this argument. I'm also sympathetic to the argument that people said, people said the same negative arguments about Palantir when it was $7 and then it broke out. The only difference here is Palantir and Robinhood are not banks. And the one thing that I keep going back to, and please tell me if I'm wrong on this, but if it is a bank, it's going to be trading on its tangible book value because that's the majority of what the business is. And that's how banks historically trade. That's the nature of the lending business. If it is not just a bank, then we will see it in the inevitable growth of the numbers from the SaaS side. We haven't seen that yet. Like the one difference is Palantir, 70% they showed in Q4 2023 commercial revenue growth. 69% customer count growth, GAAP profitable for 6 quarters in a row. Like we saw these metrics go to the upside. The government business now 16% year over year. Robinhood, we saw the crypto volumes explode. We saw the revenues go 40% year over year. We saw things tangibly change. They added 500,000 users last quarter. Like we saw real numbers prove that it was a legitimate fintech. And that technology actually was a benefit to them because 90% of their costs were fixed. So they had the ability to have that scale. SoFi, we have not seen the massive growth from the tech side of the business, which is all that matters, not the lending side, because the lending side could grow 5 quadrillion %. It doesn't matter. It will be valued as a bank. The tech side of the business grows, then the market can give it a tech multiple. But if it doesn't grow dramatically, then I don't know if that tech multiple is there for SoFi. That's the confusion I have when it comes to SoFi. Where's Palantir right now? After hours, Palantir 2502. So Palantir 25 after hours as well. I do think it's possible SoFi rips to $8, $8.50 on the next earnings. And then we'll see what happens with SoFi. It tends to rip up and then just come back down. But if that's the case, just because sentiment has gotten so bad at this point, like when sentiment is this bad, you tend to see, Adobe, Salesforce, like we saw these examples in terms of how they rebound. But I don't know what pushes us to like $15, $18 for SoFi. If SoFi didn't drop crypto, they would have been at $12 by now. I get it, regulations and stuff, not the future of finance though. Yeah, that's another problem with SoFi, right? They were forced to get rid of the crypto because they became a bank. This is the one thing about SoFi and Robinhood also. Like people were so excited SoFi got a bank charter and that allowed them to grow and do all this stuff. Robinhood to me is basically acting like a bank without being a bank. Literally, they can give you a loan for 6.75%, a margin loan. And it's better because like, let's say you don't pay that back, they'll just sell your stock. And so it's collateralized via not your credit score, but your fucking stock. Right. And then as a brokerage, I keep all my cash in Robinhood. It just stays there, collects 5%. Like there's so many different ways I use Robinhood. They even have a cash card. They make $10 million a quarter from their cash card, from literally going to the like when you go to use your Apple Pay, you can select Robinhood over like Chase or something and use that. So there's a lot of ways it's functioning as a bank without being a bank and having the risk of a bank. And I think that's also another thing that's good for it. Shivan says, yes, I agree to some extent. It's not quite a tech company to a bank as Tesla is to a car company, but it should definitely be valued more within of a tech lead. I agree if the tech business starts growing more rapidly. And I think that's what we're going to have to see for it to get there. All right. So that's what we got in the context of SoFi. No stress investors. No, they would not. SoFi did not do crypto in-house. They paid Coinbase to do it. Crypto sucked on SoFi. No wallets or anything. Yeah, see, I never bought crypto on SoFi, so I don't know what the experience was like. Granted, people don't really love the experience buying stocks on SoFi, so I don't know if people would love the experience of crypto. But I would imagine it wasn't the best experience, just given stocks are not the best experience either. But we'll see, dude. Sentiment's getting low. I don't know if this bad boy gets to $4. I think it eventually gaps up. We'll just see when it happens. Some news on Palantir. $878 billion for the Department of Defense has been approved for fiscal year 2025. A lot of ways that they're doing this: autonomous platforms, AI, ML, decision support. human AI integration. This is all from their website. Synthetic environments. They're interested in research that enables improved situational awareness. That sounds like potential IC2 and the mixed reality headset could play a role there. Distributed AI, underpinning methodologies, special topics. I mean, there's a lot of stuff. This is a really good post. I'll put it on the chat if you guys want to read it. There is a ton of stuff that the government is looking at, or the DoD, when it comes to spending this $878 billion. I originally read this post as $878 billion for Palantir for 2 seconds, and I almost. Could you imagine, dude? Could you imagine if they said $878 billion for Palantir? Like, I would actually I don't know what I would do. I don't know what I would do. So I read that and I read it the wrong way. But there's a lot of different reasons for why Palantir continues to gain momentum. If the government's going to spend this much money on what it seems like Palantir is doing, then you're going to get Palantir get a nice little bulk of that cash as well, and that money over time, which will be exciting to see. Matt says, though subjectively better than Ally, SoFi to me was just another Ally bank that was going to charge change banking that just ends up being a normal bank. And, Steve agrees with you. Steve has said that if Galileo and Technisys don't rapidly grow, then there is no difference between SoFi and Ally Bank. And he said that before the earnings. He was on the show basically saying, like, hey, the fintech part. I mean, so the reason Steve invested, if you guys have read his articles, is because of the AWS of fintech. I mean, that's how he got even me into it. So originally I got excited about it because of AWS of fintech. And when I kind of saw that wasn't happening, I kind of just realized, all right, then they're just a bank. And that's when Robinhood became a lot more attractive to me at that point. Market is dumb. So are most investors. It's a bank. So what? JPM is a bank to learn the trajectory. It's not saying that SoFi won't be a good investment if it's a bank. The problem is SoFi was pitched as something much more special than a bank. And if it's a bank, then it's going to be on a bank's growth rate over the next 10 years, which means it's not going to see some rapid acceleration the way Palantir, Hims, and Robinhood did when they were stuck at $7, because there's nothing to rapidly accelerate, right? Unless the lending business grows rapidly. But even then, it's still going to be valued in terms of tangible book value. So it's not that it'll be a bad investment. It's just that it's not going to aggressively scale the way some of the other stocks did from their bottoms, because there's no catalyst to get it to scale, which means it might just be a longer hold at the end of the day. The AWS of fintech was spouted by Chamath. Dude, do you guys know Chamath is now selling a $1,000 Substack for his defense a newsletter? I couldn't believe this when I saw it. So he's like getting into defense tech, and he's charging $1,000 for subscriber only deep dives and essays about how he's thinking around defense tech and his broader thoughts about the market. Look, this is America, and if someone's willing to pay $1,000, then like, who am I to say? It's so confusing to me how these guys are so rich, like absurdly rich. I mean, more money than you could ever imagine. And their idea is not, hey, let me like put out content that builds my brand. Let me like charge people $1,000 for this content. But I just never understood it, ever. Like, I never understood how you could be that obscenely rich and say, oh, let me build a side business for $1,000. Maybe you're that rich because you find a way to monetize everything. Maybe. But at some level, I feel like your brand equity matters more, and charging retail $1,000 to like read your notes when you're making billions of dollars on different investment, it just doesn't like logically make sense to me, along with the fact that, his brand took a hit with the whole SPAC stuff. So I don't know. That is weird. I never thought that. The All-In podcast is free. Yeah, the All-In podcast is free, but it's just weird trying to monetize a Substack, dude. Like, dude, that's like what influencers do. Like, he's a billionaire. Like, he's just like, what do you need from a Substack? Like, I don't know. I didn't get it. I didn't get it when I saw it. Okay, let's take a look at this clip. So here's what I want to show right here. Okay, so here is Ryan Detrick. So again, he's one of the people that said today that if the market hits all-time highs at least 20 times or 30 times in a year, the market tends to go up a lot from there, about 20% on average. Here's his thoughts on where the market's going and where we think the market will continue to go. Let's take a listen from him. And then after this, we'll talk about GameStop and everything that happened in their call.
The stats that I know you like to look at in terms of when the market has behaved in the way it has this year, number of new highs, degree of upside, all that stuff by this moment in the year usually has good things to say about what's to come. Is there any reason to think otherwise at this point based on some of the internal rhythms of the market?
Yeah, Mike, thanks for having me back. I mean, we are bullish, we're optimistic, but you're right. I mean, just last week, right, we had 1.6% weekly gain on the S&P, yet less than 200 names in the S&P were higher. Less than 100 outperformed the S&P 500 last week. What's that tell us? Well, maybe there's a little weakening. We know, and a lot of people come on all day talking about this. Tech has done so well lately. Maybe there's some weakness under the surface, but honestly, Mike, I think it's a lot like January. We saw this in January, some weak divergences. But you know what happened? Market kind of went sideways for a week or two, and then stocks caught up and a lot of participation came in. And we still think that's probably the play here.
Yeah, I mean, I know you've been focusing on, as others have, about July and its record of being very strong, pretty consistently for stocks. On the other hand, the final stretch of June sometimes is where you have gotten some choppiness. So what are the relevant things you think to focus on here going into the second half of the year?
Well, you're right. I mean, people are going to hear this a lot. July has been higher the last 9 years for the S&P 500. But in an election year, and I came on with Scott a while ago talking about this, you tend to see a summer rally, right? June, July, August, usually really strong. So we're still in that strong seasonal time frame, Mike. And then I like to look at credit spreads, right? Investor grade corporates, what's going on there? There's no monster under the bed, right? We're not seeing any major stress in credit markets. We're hitting literally the 30th all-time high of the year for the S&P as we sit here and talk today. So there's always worries, concerns, but bigger picture, we're overweight equities. We have been since December of 22. Mike, we still think there's pretty good upside the second half of this year coming.
And do you think it pays at this point to essentially look beyond the leaders? You know, I mentioned the NASDAQ 100 up another 1.5% here. It just accelerated up higher today on kind of nothing new. And I just wonder if people are kind of capitulating to that particular type of market leadership and leaving the rest behind.
Well, clearly that's what we saw. I mean, last week, tech was up 6%. Real estate was higher, and every other group really didn't do anything last week. So we're starting to see that. We think there is going to be more of that. I don't know if capitulation is the word I want to use, but some of that moving into other areas. We like industrials. We like financials. I know they struggled last week. And then obviously small and mid caps, they're dirty words a lot of times with the underperformance we've seen. But we really think with the inflation data, you had some guests come on before me talking about inflation, a lot of positive trends. I mean, grocery prices down 4 months in a row, new car prices down 5 months in a row. There are some things happening on the inflation front. Yes, shelter is that stubborn part of it. But if you look beneath the surface, Mike, we think there's 2 cuts coming, September and November. And once that's a little more clear to people with one more probably good month of inflation, that probably can add to that or allow for that broadening out, if you will, of some other groups finally taking the baton back from tech, which clearly is the all-star.
And again, that's consistent with everything we've heard throughout the entire day about just inflation coming down. Therefore, there's broader momentum for interest rates to happen. Okay, so apparently we had Lennar earnings today. Let me pull these up. I didn't think we had. This is a home builder, if I'm not wrong. So their earnings are actually pretty important. Today's what, June 17th? Oh, we did have earnings today. Okay, well, why don't I see it on their website? Let me go to Twitter. Lennar stock is LEN. Okay, so we had Lennar earnings. Let me know if anyone owns Lennar. Lennar earnings. What do we got? No, it's not out. It's not. Does it have 4:30? Well, today's 4:30 right now. It's not. It's not on their website and it's not out. Do they do it later than 4 o'clock? Their call is going to be tomorrow at 11 a.m. But if the earnings are today, let me see financials. Yeah, I don't see the earnings. I don't know if anyone else sees the earnings. Yeah, it's not out. Weird, not out. That's weird. Maybe it comes out a little bit later. That's weird. I guess it's not out, or maybe they release it tomorrow in the pre-market. That's weird though. This website says it's out after hours. Okay, so we'll get back to that, and I'll let you guys know if we get the numbers there, but no numbers yet. Market wants 8.5 billion on Lennar and 3.24 on the EPS to see if that comes out. Okay, so GameStop. Let's talk about them, and then I want to do a little bit more on Palantir because a couple things I want to show as well to explain why the market might be rallying today for Palantir. And if I see Lennar, then I'll keep going. Jeremy says they built our home. Yeah, home builders. I think Buffett bought a lot of the home builders as well last summer. So home builders are a place where there is exposure to be had. It's just a question of when those rates get cut for them to be able to do it. Are they out? Are the earnings out? Do you guys see them? I don't. Latest? No, you said they're on CNBC. Let me pull that up real quick. They might be on CNBC. If not, then we'll We'll talk GameStop. Oh, we got them. All right. Yeah, we got them on CNBC. All right, let me pull them up. This is an important one. This is one of the largest housing builders in the United States. Okay, let's go to Lennar, and then we'll talk GameStop after it. Here we go.
And bottom lines in Q2, EPS came in at $3.45 a share versus estimates of $3.24. Revenue of $8.8 billion versus estimates of $8.5 billion. Lennar Chairman Stuart Miller said in the release, although affordability continued to be tested by interest rate movements and simultaneously challenged consumer sentiment, purchasers remained positive to increase sales incentives, resulting in a 19% increase in our new orders and a 15% increase in our deliveries year over year. So note increased incentives, he said. Not surprising given higher rates in the quarter. Average sales price of a Lennar home was down 5% from a year ago to $426,000. That's net of incentives, but that is down less than the 8% annual drop that we saw in Q1. Guidance for deliveries was in line with estimates, but guidance on new orders was slightly weaker than expectations. Back to you guys.
All right, thanks, Diana. That one's moving around quite a bit here in overtime. It was higher, almost 2% ahead of the results, and now it's about flat.
Interesting. So nothing too crazy. They did build 19% more houses year over year, if I'm not wrong. It's flat after hours. Market's kind of just like, okay, nothing too amazing, nothing too crazy. We'll deep dive into the financials later tomorrow on the market open, but 21,000 more houses year over year. That's not bad. I mean, I know the housing market is struggling right now, but if they were able to go 19% year over year growth on that, that seems like their incentives are structured in the right way and they're still able to sell homes, or at least get the orders to be able to build more homes, not sell homes, which is a very important thing. Many home builder incentives to get rates down. Yeah, that's another point as well, which is not bad. Lennar, let me see their stock over the past year. Their stock year to date is up 6%. Over the past year, it's up 28%. It bottomed in October 2023. Past 5 years, they're up 204%. So it's done well. It's not like it's done bad this year, just not as well as big tech. Okay, let's talk GameStop. So I was listening to the GameStop earnings. I think a lot of people, the algorithm on YouTube got a lot of people that are into the GameStop stock onto that stream. And well, let's just say the chat was very interesting in that stream about GameStop. A lot of angry people, but a lot of people that were saying that there's no reason to be angry because, you know, it's GameStop and they kind of expected what was going to happen. But this is what we got. I mean, it was a train wreck in my opinion. And it's just like, just being objective, it was absolutely disgusting. But this is what happened. Management said, we have nothing more to say about the $3 billion we raised last week. We are focused on building our business. It was a 20-minute call, zero Q&A. Again, I'll show you what Ryan Cohen said in a second. But on the topic of dumping 120 million shares, management was like, we have nothing more to say than what we said in our public release. We are going to continue to keep building our business. Thank you all for joining. There was one proposal to like increase diversity, equity, and inclusion inside of the company. Like, you know, on Tesla shareholder call, you had to hear like the counter proposals and then you got to vote for and against it. That one did not win. The GameStop shareholders voted against DEI in the company. But outside of that, that was the extent of what we got. It was not good. This is what Ryan Cohen said. So I'll just read what he said. Thanks, Mark. Hi, everyone. I want to take a moment and discuss the retail business and future of GameStop. When he said I want to take a moment, he literally meant a moment, dude. This was like 2 minutes, maybe 95 seconds. It was done. It was a moment in time, and then he disappeared. With respect to retail operations, the plan to continue reducing costs and focus on profitability. Revenues without profits and prospects for future cash flows are of no value to shareholders. I don't even know what he's like. He's like, yeah, if we're not profitable, then we're not going to give any value. It's like, what are you saying? Like, what is this corporate like ChatGPT nonsense? This means a smaller network of stores with an expanded assorted of higher value items that fit into our trade-in model. Basically saying we're going to cut down stores. Okay, we all knew that. That is like everyone knew they're getting rid of smaller of some of the stores and they're selling off some of the real estate. So there's nothing new he said there. Having a strong balance sheet, especially in times of economic uncertainty, is a strategic advantage. Basically saying thank you for giving us the $4 billion. While the future is always uncertain, the last decade's monetary and fiscal policies, both within the U.S. and globally, are historical anomalies. Exiting from an ultra-low interest rate environment is likely to have unforeseen reverberating effects across the economy, as seen with inflation hitting 40-year highs in 2022. Under the current interest rates, an investment made in today's economic climate must bear a higher return threshold. He's like, hey, if you invest in us, you should have high expectations from us. And we're listening to this like, okay, sure. But like, what are you going to do with the money? As my father always said, actions speak louder than words. This is when I lost it, dude. And I was like, what the fuck? We are focused on building shareholder value over the long term. We are not here to make promises or hype things up. We are here to work. Thank you for being a shareholder. I mean, dude, you talk about a company that does not give a you know what about shareholders, and the GameStop shareholders can disagree with me on this. By the way, I've been pretty nice around GameStop. I've said they're not a meme stock with the $4 billion in cash. I actually think they can turn around the entire business. But when you hear stuff like this, when you go through the moment we went through, the 20 minutes we went through on the shareholder call today, I mean, it's a slap in the face. I think the only question people wanted to know is like, what are you going to do with the money? And look, maybe they don't have a plan with the money, which is fine, but like no inkling of how they're going to strategically allocate that $4 billion. GameStop down 12% on the day. And so I think a lot of shareholders were just like, all right, so I guess we just have to trust that they're going to do something good with it. You guys know, I think they should put it into Bitcoin, but they said nothing. And so now if you're a shareholder, you're kind of just left in the dark wondering what's going to happen. Now, Roaring Kitty is confusing because he just tweeted something. And it seems like this guy knows more than everybody else, given the way he's tweeting. Again, he still has 9 million shares. This is what he tweeted. It's a what do you call it? It's a cartoon character, probably from some Disney movie, with green. So he's kind of signaling like green is coming or something like that. So he tweeted that picture, and then he tweeted this picture 3 hours ago as well. I don't even know what this means, but I guess this is something, right? So it's like, it seems like he's tweeting with no care in the world, and he kind of thinks there's a game plan that's happening. And again, I said last week, if Roaring Kitty, Keith Gill, and Ryan Cohen walked into a bar in Massachusetts, no one would probably recognize who they were. They probably had a drink, and maybe they talked about some future plans, and that's what set all of this into motion, and no one probably knows that they ended up doing it. It's just a theory, but I don't know how you could have $200 million in a company, feel zero like kind of pain. It's not like he was buying this at $2 like he was 4 years ago. He's buying this at $23, which you could argue is it's not worth $23 at all on any fundamental basis, and have no issue with the management call today where they basically spit in the face of shareholders and said nothing. I mean, maybe he knows something that the rest of us don't know. Maybe he knows something that the rest of us don't know. They could have hyped up the stock so much. Yeah, I mean, look, and they didn't have to literally hype up the stock. They could have just said, hey, we even if they just said, hey guys, we're super excited to take over, the online gaming world. We have a lot of different plans, no specifics yet, but we're getting ready to do different things. We were able to successfully raise $4 billion. We have lots of plans. Like even the tone of their voice was just like, all right, let's just get this over with. And it was 7 minutes late too, so it didn't even start on time. So it was very weird. Very, very, very weird. Your fear Amit is my alpha. Roaring Kitty right now listening to the stream. Yeah, probably. And look, so far he's up 15% on the shares. He's up like $10-15 million. So he's made money, but it seems like he has a longer plan for what's going to happen. Adam says, imagine the plan was to be on the board, get shareholders so mad with current owners, and then become CEO and buys $3 billion of Bitcoin. He did post a video. Fine, I'll do it myself. I mean, look, I think anything is possible at this point, but I think he likes Ryan Cohen. I don't think he wants to get rid of that guy. I don't think he wants to be the CEO. I think he actually believes in Ryan Cohen. Palantir down a little bit after hours, 24.94. And because he believes in him, maybe that's why he's going long with 9 million shares. Okay, Palantir, a couple other things I want to show. So I want to show this video if you guys haven't seen it. There's actually 2 clips I want to show. First is from AIPCon, from the halftime show. This is where the CEO of Tampa General, they just signed a $50 million 7-year deal with Palantir. Look at what he said about why they signed that deal. Some of you guys might have missed it. Some of you may have not. But this was a really strong 1 minute and 30 seconds that I think we're going to see a lot more of these going into Q2 with deals for Palantir. And another reason that the market is probably very excited.
A couple of reasons why we wanted to we're leaning in, and we've extended our relationship with you another 7 years. One, your people are outstanding.
We agree.
You're smart, you're well educated, you're thoughtful, you do a great job at listening, and you move really quickly. We're a tough customer. There's no question about it. So this is like not a paid advertisement by any stretch of the imagination. It's not. We can be a very difficult customer. One of the things that we struggle with in our industry is we move a little too slow. You act as an accelerant to the work that we're doing. So that's one big reason. Your technology platform is outstanding. And you've already heard lots about that in different industries, and that applies in our industry for sure. You're changing the DNA of our institution. I mean, that's the way folks have to think about it, at least in the healthcare space. You're literally changing the way we think, the way we perform, the way we ask questions and deliver care. So when you kind of put all of that together and you think about the quality of the people, the quality of the products, the culture and the organization that you've created under Alex's leadership and so many others, to us, it was a no-brainer. And we're culturally aligned, which is very important to us. And speed is incredibly important, because in our world, you have to be really good at what you do, but you also have to be really fast at doing what you do. And you allow that to happen.
So this part I thought was incredible, dude. When he says you are changing the culture of the DNA of our company, I mean, I listened to that again today, and I was like, Palantir just posted that clip on their Twitter, and I was like, holy crap, dude. I was there in real time. I didn't really process the words he was saying, right? Because I was just like in the moment. But now looking back, I'm like, damn, dude. For someone to say you are changing the culture of DNA of our company, they're not saying that about other SaaS companies. They're using those SaaS products, but it's not changing the culture of the freaking DNA of the company. I just think you could argue Palantir's a little overvalued, whatever. I just think that's something special. And the more they continue to do that with clients, they're going to continue to win. Here's another clip that I found over the weekend because I'm a nerd who watches old Palantir shareholder meetings. Yes, sometimes I get bored on a Saturday and I'll watch stuff from like 4 quarters ago. I don't even remember. I think this is like Q2 2023 or something. But here's one thing that I want to hear you guys say or hear Karp talk about when it comes to acquiring other companies.
We are very focused on investing in ourselves. We are not as focused on acquiring other companies. We believe we have the right products or we will build them. So we are investing in what we do, what we believe are the best in the world. Very little interest in products we see on the market. And so it's really an investment in ourselves, in our talent through changing the compensation and our ability to retain people by making sure we're focused on a mission that is crazy important to us in the world, in showing our belief with actual real attendees and running like hell. We are.
Now, why did I want to bring that up? Number one is because we're seeing a lot of SaaS companies start to do more acquisitions. And I think that clip resonated with me a little bit more because, again, the market's going to give the premium to the companies they think have real AI-enabled growth. And it seems like Palantir is trying to do that without doing external acquisitions because they believe they have the best talent in the world. And so, I mean, that's not the reason Palantir is up today, 6%, but that is another part of the overall thesis that when it's time for them to really monopolize and capitalize and release new products that further enable their AI ecosystem. I mean, we barely talk about FedStar, which I think is going to be a massive business, and that hasn't even really, come into fruition. It's going to be because of things they build internally, not because of things they have to acquire, and they have the right talent and culture to continue to build those things internally. June says, admit like CEOs who are lyrical wizards. I have a thing. I have a thing for wordplay. Some people have a thing for foreplay. I have a thing for wordplay. If you can talk right, you got me, dude. You got me. That's why I like Vlad from Robinhood. He knows how to say certain things and get you excited and just. I like CEOs who like to have fun, bro. That are so confident in their fucking business that aren't afraid of the world. Like, I don't think when the stock was at $6 for Karp, he was never afraid of what was going to happen or how the market was. He was just like, honestly, he was like, fuck you. I don't give a shit what you think. I'm going to win. And same thing for Vlad when the stock was at $8. I think he was just like, we are ready to take over the world. And given the announcements we've seen all throughout the past 6 months on Robinhood, they've just absolutely crushed it. And so I think CEOs, I'm starting to like, I think my investment philosophy is founder-based CEOs. If I'm going long on a company, right? If I'm just like wheeling it or something, it doesn't matter. But like, if I'm going long on a company, I want a founder CEO. I want someone who's obsessed with product more than sales and marketing, because I think that ultimately wins at the end of the day. And anyone who can say Massachusetts, yes, anyone who can do that. And I just want someone who's not afraid to tweet a meme, who's like excited about being in the moment and like being a CEO. Now, Karp's obviously not on Twitter, so he's not going to tweet a meme, but I mean, like the way he talks is very meme-like, right? The jokes he makes, all that stuff. He just likes being in the moment, and that's why I have a tendency to to go towards those guys. And look, I'm naturally, I like philosophy. I like wordplay. I like coming up with unique ideas, expressing them, and the presentation of ideas. That's just what I'm attracted to. And so if the product can match that along with the growth from a CEO, then I think that's a big part of how I think of investing for the long term for some of these companies. Michael says, shout out to Michael. I met Michael at AIPCon. He was there as well. He says, I spoke to him during the world tour and he was talking about how crazy good Palantir engineers are. I explained to him that us engineers see FANG as the hardest places to get in, but Palantir even more. Yeah, Michael and I were at dinner with this guy named James who left Google for Palantir a bunch of years ago, like almost 10 years ago. And James was the dude who was telling us, he was just like, dude, at Google, like we would build a product. It would take 2 years to get it approved. It would get approved and then legal would shut it down immediately. There would be no chance for a product to get out into the world. And that's why he left Google and he went to Palantir, because he was like, there's no like room for me to innovate. There's no way for me to get things out the door and like have an impact on the world. And when you're some of the smartest engineers on the planet, you want to have an impact. Like the fat salaries only make you feel so fulfilled until you really want to change the world. And a lot of them end up coming to Palantir. Harmsy says, assuming Elon, Karp's 1 and 2, who is your 3? I think it would be Vlad. Elon, Karp, and Vlad are like, at least this year. I mean, you got to put Jensen up there, obviously, right? Jensen's probably up there with, I think it's Jensen so far, Elon, Karp, then Vlad. If we had to round out the top 5 this year, honestly, you know who it is? You know who I would put? I don't even own the stock, but you know who it is? It is George Kurtz, CEO of CrowdStrike. I believe he's a founder CEO as well. He's just crushed it, dude. He's absolutely crushed it. I would put George Kurtz up there. He's had an incredible year as well. So yeah, those would be my 5. All right. I think that's it for me. Do we have any other news that we didn't cover? Do we have anything else that we didn't cover? We talked about Microsoft price target upgrade. We talked about China. I did upload a video on the channel with my guy, Kevin Zhu. He just started a new app called After Hour. Really cool app. Peter Thiel invested, not only Peter Thiel, but Peter Thiel along with other investors invested about $5 million into the product. It's essentially Twitter for stocks, but it's way cooler than Twitter for stocks. You can like connect your portfolio and like the app design is really cool. So if you guys want to check that out, you can watch that interview. He actually turned 35,000 into $8 million in 2020. So he has a crazy story and he just bet on a bunch of meme stocks. And then he built an app for like people to talk about meme stocks, degeneracy, all that stuff. So if you guys want to check out the interview, that's an interesting angle that I paused myself. But if you want to check out that interview, I thought it was a good one on the channel and you can check that out. Anyone got the Robinhood Gold Card? So I got another couple messages today of people that have qualified for the Gold Card and it's coming to them soon. So I think they're rolling it out over the course of the next probably 4 to 5 months. And I think by the end of the year, they're going to have a lot of them that are coming out. So I got a bunch of messages today, probably not everyone yet, but a lot more people will be getting that Gold Card soon. Mine just shipped. Yeah, Fritz. Yeah, a lot of people are starting to just get shipped. Okay, cool. That's it for me. We'll be on Finance Junkies today at 9 p.m. I believe Steve will be joining us. I have a couple announcements we got to make on Finance Junkies, so I'll see you guys there 9 p.m. today, and then we'll be back tomorrow 8:45 a.m. on the Market Open. All right, that's it. Thank you, everybody. Appreciate it. Have a good one. Thank you for joining, and we'll see you later today. If not, I'll see you on the Market Open tomorrow. Could you do 24 hours tonight? I can't do 24 hours straight. Not yet. We will look in the summer. I think we will have a stream where we go 24 hours. We will have one of these days in July and August where we'll go 24 hours. But we just got to plan it out. But we'll do it. Thank you guys. Appreciate it. We'll see you guys later tonight. Bye, everyone.